Good afternoon, everyone. We just thought we'd punch up and give you a live view of Swing Machine and this is volatility, right? We swing down, we swing back, we swing down, we swing back and forth, forth and back. As traders, nirvana, absolute nirvana. Check it out. 10:15. Well, this is excuse me, 5 minute. 10:35. She goes short. 10:15 long. 10:20 and 3 grand. 10:25 long. 4,300. 10:20. 2,600. 9:55. 2,300. 10:10. Gold 1,600. Silver long. 10:20. 2 grand. Don't ask why. Don't mess with it. When you're trading intraday, we're trading. We're extracting cash flow from the money flow. You have the prerogative to start and end whenever you choose. I'm Bagging On. This is Stock Market Caddy. We're going to let you watch for about an hour or so. And any questions, let us know. Good afternoon, everybody. Where are all the traders? Holy smokes. Great volatility. Up, down, down, up. The life of a trader. We move in, we move out, we capture the cash flow, and we move on. And every little dip in gold and silver, they're buying it up. Doing the same thing at the moment with the S&P and the equities as well. And now it always depends, what is one's interval time frame, or if you're using price charts, how fast. Let me put it this way: we can't control the market. We can't, right? It is what it is, and it's controlled by a whole lot of things, right? Other big hedge funds, the Treasury Department, everybody's in here getting their piece. We can't control that. All we can do is track it, the money flow. Now, you get to decide what you want to trade, when you want to trade, what kind of leverage you're going to use, right? The folks who use too much leverage on Friday in the crypto space, they got a can of whoop ass, right? They got lulled into it, right? They're out there sailing around and the waters are real calm and everything's fine and until everything isn't, right? And then they're going to be bitching and moaning. It's rigged, No, they just put themselves in harm's way. They didn't understand the risk. They don't understand the game. So the big part of the game is that we can't control the markets. Nobody can say with any certainty what the market is going to do, in the next 5 minutes, the next 5 hours, the next 5 days, the next 5 months, the next 5 years. And I get an absolute kick out of these people. You will see them at the end of the year on the Contrarian News Bubble channel and in the media. And these guys will come out like fleas on a dog, and they'll come out and they'll say something like, oh, yeah, Joe Bag of Donuts on Squawk Box, or the other guy, Dworkin there, Andrew Sorkin. The economy is really good, and I think that, the S&P is trading at 6,700, and I think, there's going to be some give and take, and I think this time next year, we're going to be at 7,800. That's what we're going to do. And then before he leaves the studio, he'll say something like, now, please understand, Joe, I'm not some fancy-eyed day trader. I'm an investor. And I can't tell you where the market's going to be tomorrow. Now think about that. He can't tell you where the market's going to be tomorrow, and nobody can. Nobody can with 100% certainty. But he can, and he will tell you where the market's going to be a year from now. Okay. And he will get away with that. And get away with that, and get away with that. And a bull market will bring in more suckers. It will. Until he doesn't. And he knows that. Now, he's not going to say that. But he's going to collect his stock options from this bank and that bank and whoever bank he's working for now, what we call the asset gatherers. And, he's going to be moving on. And there are dozens and dozens of these people over the last decades that have done it, and they're long gone. They got their home up there and, wherever it is, Martha's Vineyard, Nantucket, San Diego, and they're hitting the golf ball and they're having a grand old time. And the retail trader, the retail investor, got blown away, So it goes on. But you can control yourself. You can. You can control what you buy and what you don't buy, right? So you got to choose what markets you want to buy and what you want to sell, because you can also make money on the way down. You've got to choose the interval or the speed at which, and notice I say the speed at which you trade or invest, because you may not be using time. You might be using what we call tick charts or price charts. And it doesn't mean that you're trading every single tick, right? You can be using a tick chart and still be a long-term investor. It's a great way to go, actually. Can be a great way to go. But you get to decide that. Also, you get to decide the risk. Now, if you just say, oh, you know what, I can't be bothered with that. I'm getting in the market for the long term. you know, I'm going to be in there for the long term, so I'm going to take my, I'm 45 and I inherited this and I got $500,000 in my IRA and, I'm going to plow it into the S&P. Okay, well, go for it. Go for it. I'm joking, right? But people do that. People do that. I can't be bothered. And Don, you can't time the market. You can't do that. I know. I know. I've heard it all. It's not about time in the market. It's not about timing. It's time in the market. Everything is suited for the asset gatherers. If you haven't figured that out, right? They're very, very good at gathering people's money, patting them on the head, sending them out the door, and say, hey, don't bother me anymore until the shit hits the fan, right? So you have to decide. And you don't have to be. Now, we have this set, and we're looking at this intraday. I'm not suggesting that everybody be an intraday trader. You can set these tools to be a long-term investor. You can. If you understand, what it is you're doing and managing your risk. And you might use these tools to look over the shoulder of the broker or the broker. To make sure that, you're not, they're not selling you the Brooklyn Bridge. If you want these tools, Swing Machine and others, on your desktop, and you want the instruction on how to use them, be sure to visit our website. That'll give you some ideas to who we are and who we aren't. But we don't make specific recommendations to buy and sell. I'm not going to tell you that, this is a buying opportunity in Bitcoin and you got to go buy Bitcoin or Ethereum, or you got to go buy oil, or, the algos will present opportunities. And then if you have the wherewithal and the skill set, you can choose to take it or not take it. Make sense? Let's take a look at something. Let's put the VIX, which is the fear gauge, on a daily basis. Let's take a look at it. So the VIX has been short for 107 days. That's what that means, 107. Short, meaning it's been trending down. A VIX is a contrarian indicator, very, very important one, because it's reflective of the speculators in the options market. And when the VIX is trending down, the S&P has a tendency, not a tendency, it's almost a direct relationship to trend up. So let's go look if that's true. So let's put the ES on a daily. So the VIX started trending down 107 days ago. Let's not talk about Friday yet. Let's just talk about this. So back on May 13th of 2025, it started trending down. And if you had the tool on your desktop and your broker is telling you, the world's going to end, maybe you say, maybe not so fast. And preceding this by just 6 to 7 days, the S&P actually went long on May 7th. And it's still long, despite what happened on Friday. This is a daily interval, a daily. Swing Machine has delivered in profits between the entry price and where it's trading now, 16%. But because this is a leveraged bet, it's up 47 grand. How much capital would it have taken to put that trade on and to sit on it? About 18 grand. Now we flip these things intraday, and intraday it's a fraction of that. 47 grand. Now, what we're seeing is, though, that back here on May 13th, let me just point this out to you. The VIX would have been down here. Let me go get a marker. This is where it would have been. It would have been down in here. That's where the VIX would have been. The excuse me. Let me back that up. The VIX, in all likelihood, was just the opposite. Would have been up in here, very close to it, and or coming out. The market would have been down in here on a daily basis, back here in May. There's an old saying, when the VIX is high, you buy. When the VIX is low, you go. Now, but the VIX is still, even though it's up in here, it's still on a trend basis, it's still trending down. It's ripping against that trend. And what put that rip into that trend was Friday's action. And when that VIX ripped up against its downtrend, it sent a shock into the trend on the ES and forced it into a dip. But now lies the question that everyone wants to answer. What are we doing from here? Is the VIX going to come in? If it does, then this market will resume its trend and keep on going. It's already done it for 111 days. It might do it for 200 days. It might. But we will have, and our members who have these tools will have the skill set and have the visualization to see. But euphoria is euphoria and panic is panic. On Friday, the VIX was here. And the ES was here. That's where it was. When the VIX is high, what do? You buy. Hard to do. Hard to do, especially on a Friday afternoon when the noise level was very, very high. So we're not, as traders, we're not terribly shocked that we got a bounce. But the question is, is it just a momentary bounce? Just going to be a matter of hours, right? On a daily basis, as long as that VIX stays above that mean, these rallies that you keep seeing in the S&P are going to get hit with more and more selling. And then they're going to bounce back, and they bounce. Some of the most vicious rallies happen during bearish phases. This is how we track it. Of course, the interval that we're looking at here is daily. We could be looking at a weekly, we could be looking at a monthly. And if you are a monthly investor, quite frankly, you shouldn't be paying attention to what happened on Friday. You shouldn't even be paying attention to it. And if you're a daily swing trader, you probably shouldn't even be paying attention to what's going on intraday. If you want to trade intraday, then trade intraday. Just learn how to do it and get the tools that you need and hone your craft. I've got to take Ted out. Let me erase this. I'll let you watch. I'll come right back and answer any questions. But on a daily basis, the VIX is still very elevated and is ripping up against the short trend. So that tells our members that yes, can we get rallies? Absolutely. But in all likelihood, those rallies are going to keep getting met with selling. And we'll put this back to a 5 minute. But we're traders, right? So, we don't get, when we're trading intraday, we don't get married to, we don't want to confuse ourselves, right? And you can have buckets of money, right? You can have buckets of money that are invested long term. You can have buckets of money that you swing on a daily or weekly basis. And then you can have a bucket of money that you trade intraday. And you can learn to hedge one against the other. You can certainly do that sort of thing and run basically your own hedge fund. But it is a skill set. It does take time, it does take discipline. There is learning. Um, there is not enough time, though, to be listening to the shit that's on the media or the stuff online. Because if you do, from a trading standpoint, you'll get yourself so tied up in such knots, you won't know whether to, scratch your watch or wind your ass. They'll just confuse the hell out of you. I see it and hear it, but I've seen and heard it for so many years that it's just like, it's just noise, amusing to me. We put out a video on Thursday of last week and said, hey, kids, we're seeing something very unusual here. We're seeing gold and silver running, and the dollar is also running up. And we made a video. You can go see it. It was on Thursday of last week. We said, hey, something's wrong here. And why is the dollar going up? The dollar is going up because somebody very, very big is liquidating positions and getting into cash. Oh, that might be interesting to know, right? Maybe they knew about the tweet or anything from Trump. That's all kind of kabuki theater, kind of nonsense. If you wanted to see the S&P on a weekly basis, let's go put it on a weekly. 21 weeks ago, that bugger's long. It's long. Still long. Still long. And, it would have been up in here, but it's pulled back quite a bit. But it's still long. On a monthly basis, what is the monthly trader even seeing, or hedge fund? Now, this is very telling. This has been long for 179 months. This goes back to 2010. 2010. But look where it is. It's right, pushing up in here, 80. Can it go higher? Yes, it can. If it gets into euphoria, you don't want to be coming into the market with your IRA and buying the S&P when it's up here, because the statistical likelihood that this market is going to pull back to 61.55 at this level is hovering around 65-70% likelihood that it's going to pull back in. Now, on a monthly basis, we're talking over the next, year or so. It's about 20 months. Now in percentage terms, that's 10-15%. So you plow into your money. Somebody inherited $1 million from someone, they put it in there, and you lose 200,000 over the next 12-15 months. You wouldn't be too happy. But the problem is that it may cut right through that. It might come down in here. But you're like, Don, that went long in 2010, and I want that. Well, we can't manufacture that. It is what it is. If you had the tool on your desktop back in 2010, you'd be long. You'd still be long. But it can still get up here. All we can do is get a view, right? It's like a football game, like an athletic event of any other kind. And then you've got to know and understand. Now, one of the other things that has us that you also might not know, that you probably want to know, is the market is not the economy. It isn't. Um, for sure, it is what it is, but it's not the economy, and the economy is not the market. But there is a lead and a lag. Usually, the economy lags by several months. One of the things that we see, so when we see the S&P that's been long since 2010, pushing up, in near euphoria, not quite there. I mean, it's come in a little bit, and we begin to see gold and silver going parabolic historically over decades and decades. That can be an indication that this bull, the long-term bull, not saying that we can't get rallies, not saying that you can't still make money in pockets, not saying that, but that the long-term bull is close to taking a big rest. A big rest. And he may have to take a rest for 2 or 3 years. He may have to take a rest for 10 years, but he's getting a little wobbly. But I'm not saying it's going to happen on Monday. Right? Um, but you have to decide how you're playing, right? And so when we do this, I don't want people making, what you don't want to do is, I heard some guy on CNBC or on the internet, he was really, really bearish. And so I went in and I tried to short the market at 2 o'clock on Thursday, and I got killed. That, that, that wouldn't be good, right? The intraday traffic has nothing to do with the daily swing trader, the weekly investor, or the monthly really, really long-term guy or gal or hedge fund. That's long-term money, and it is what it is. Folks, um, I will come back to answer any questions. It is 2:28, but when I come back, we're going to need the screen, and we punching up like this at various times to show you what Swing Machine is doing and how it's monitoring the market, and how you can place whatever markets you want on whatever intervals you want. And if you know how to use the various tools that you can use, and you understand the mechanics of it, you can begin to do what effect trades on a market and on an interval or on a time frame, on a resolution of your liking, understanding your risk parameters, and trying to extract cash flow. And that's really it. But if you think that you're just going to take a whole bunch of money and plow it into something, you'd probably have more fun going, and probably be more profitable if you go to the Indian casino. Um, and that's not what we're doing. We're not gambling here. We do provide, when markets have speculators like us, which is what we're doing, we're speculators, we provide liquidity into the markets. If you didn't have liquidity, if you didn't have speculators and you didn't have liquidity, then all you would have would be boom and bust, bust and boom. Right? The people who were buying yesterday were the people who sold short the middle part of the day on Friday. And in order to capture that profit, they covered. But they could be right back in a matter of hours and do it all over again. And again, and again, and again. That's what we do. Any questions, let us know. I'm Bag of Dawn. This is Stock Market Caddy, and this is S&P, NASDAQ futures, Dow, Russell, gold, silver, oil, Bitcoin. You could be trading live cattle. You could be trading soybean meal, lumber. You could be trading options on stock and you could be investing. I don't think it's a good idea to be trading stock intraday. It's not efficient use of capital. Um, I wouldn't even be bothered. Um, invest using stock, sure. Trade options around stock, absolutely. Probably not going to do it intraday, not intentionally necessarily, but certainly you could do that too. Wish you the best. I'll be back here to answer any questions in a moment or two. Thanks.